Kia ora, ngā mihi nui, kia koutou katoa. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. Sharesies is a wealth development platform whose purpose is to create financial empowerment for everyone. My name is Frances Cook. I'm the investments editor for BusinessDesk. For those of you who are new to Shared Lunch, we do these every Thursday at lunchtime. Each week, we alternate between an interview with a company leader and an industry deep dive. Now, we have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch100, that's all one word, SharedLunch100, you'll get $100 off an annual subscription to BusinessDesk, which is usually $249, including GST. The offer only applies to new BusinessDesk subscribers and can only be used once per subscriber, and it can't be used with any other discounts. Before we get started, here's some important information. Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording. Now, also just a quick reminder, if you have any questions for our guests today, you can submit them through the Ask a Question button down below. Don't leave questions in the discussion area as they are likely to get missed, but of course, do feel free to have a wonderful, lively discussion. If you have a question you want me to ask a question button. Please do be kind and respectful towards our guest and your fellow viewers. Otherwise, we will unfortunately take steps to remove you from the webinar. Now, today we are joined by Chris Meehan, who is the CEO of Winton Land Limited. Welcome, Chris.
Thanks, Francis. Thanks for your time.
Oh, thank you for coming on. Now, your company is in property development, but of course that's a huge area. So tell me, what areas Winton is involved with in property development? What is your bread and butter? And also, are there any areas that you don't get involved with?
Yeah, thanks, Francis. So essentially, we're a land developer. So residential is our focus. So we build communities. So what we do is we go and buy big parcels of land. We get the zonings in place. We then build the base infrastructure, all the sewer services, water, power, and so on. Then we typically build a neighbourhood centre, which is a few shops and a school and a childcare centre and a community hub. And then we develop a large-scale residential community around that. So that's our bread and butter. So today we're sitting on a land bank of about 7,500 lots, and that has a gross development value of somewhere in the order of $4.5 billion.
That's fairly substantial.
Yeah, it's getting bigger all the time. Yeah.
So what is involved with when you're making something that big? I mean, that has a lot of moving parts to it, right? Does it get quite complicated?
It does. The design's complicated and the planning constraints are generally even more complicated. So we put a lot of our effort into, first off, identifying suitable parcels of land that we can acquire, and then designing, essentially, it's a town or a suburb, and then we go through a rezoning and consenting process that in New Zealand, that can typically take us anywhere between 2 and 6 or 7 years before we turn earth, before we start work on the thing.
Wow. Yeah, I want to talk about that consenting process at some point because I think that's a really big one in New Zealand. First of all, a bit more on you, because you have a long history of working in property. You also founded the Bell Property Real Estate Agency in Australia, sold that, and then switched your focus to property development when you started up Winton Land in 2009.
Yes.
So what is it about property overall that interests you? And then why did you make the move into property development?
Yeah, good question. Well, I love to create. Part of the attraction for me is the design process. And you get to enormously satisfying to be able to turn a big block of dirt into a town. I mean, you can't do anything, in my view, that's more satisfying than that. You get to see the finished product. You see these families growing and thriving and kids running around and playing soccer and ball and going to the shops and going to school. It's an enormously satisfying process, I find. So for me, I was in agency in Australia. I lived there for 25 years, give or take. And so I started the Bell property business. We grew that over the course of about 10 years to quite a big business, and then I sold it out to private equity. But what really prompted me to get into development was when I had the Bell property business, my biggest client was a property development firm in Australia called Mirvac, and they were by far my biggest client. And we sold a lot of their new product down, apartments and communities. And what I found was that they had done a really good job. They'd built a brand for themselves that the consumer trusted and liked, and they knew that when they bought a Mirvac product, that they knew they were getting great quality, they knew it was coming on time, they knew they were getting it at the right price, and they knew that would never be let down. And so what I saw was an opportunity, and for us then as selling agents, it was really easy. You basically had to turn up and people would form an orderly queue in front of you, and they always wanted to buy the Mirvac product. So I really saw an opportunity in New Zealand to say, okay, there wasn't a developer of scale, size, of a trusted brand, and of a really substance that existed here. So I saw the opportunity to come back to New Zealand, which I wanted to do anyway, and start a development company that had all those characteristics of scale and trust that Mirvac had. And I think we're a fair way down the path of building that now with Winton.
That's really interesting. And of course, you are a new entrant on the share market as well. You only listed December last year. Big
Yeah.
move to list. What's involved with that? Why was it worth it for your company?
Well, we're very conservative in our outlook. We like to operate with little or no debt. So, sitting here today, if you look at the business, as I said, 7,500 lots, we're moving into retirement villages, which I'll come to later. But we've got a big, strong balance sheet. We didn't want to borrow any money to expand. We wanted to do that with equity. So the share market provided us an opportunity to take on a great bunch of really well qualified investors and give us the financial horsepower to grow. So sitting here today, post listing, we've got about $740 million worth of forward orders or pre-sold land and houses. We've got about net cash of about $250 million, and about to have, that's after we pay out our debt. So we're sitting here in a fantastically strong position to really grow the business into something really significant.
Yeah, there is a lot involved in terms of you have to do a lot of due diligence. You have to now report a lot more to the investors, and of
Yeah.
course, things like dividends. How do you weigh up pros and cons of things like that?
I mean, to me, yes, there are cons, and there's a lot more admin involved, but we were doing most of that anyway. We ran the business very thoroughly from the get-go, so it didn't change a hell of a lot. In terms of the pros, though, we now have a balance sheet that's just fortress-like. You can't beat it. As I said, there wouldn't be a development company in New Zealand with no debt, let alone one with in excess of $250 million of cash sitting in the bank. And we're really well poised for growth. So I think the pros definitely outweigh the cons in my mind.
Yeah, what sort of growth do you think you're interested in now? What are the big projects on your radar?
Yeah, so we want to expand the land business. So right now we're producing about 600 lots a year. We think we can grow that in relatively short order to about 1,000 lots a year. Combination of just sections, townhouses and apartments on the residential side. But where we're really focusing on some growth is in the retirement sector. You would have seen the retirement sector in New Zealand grow very, very strongly over the last 10 or 15 years. But amazingly, no one ever targeted the upper end of it. So we've decided to go in a quite a big way. So we've got an initial 1,000 units that are sort of in various stages of being underway. But we want to be sort of the business class or the BMW of retirement. There's a huge cohort of New Zealanders. I think the number is, the over 65s own about $540 billion worth of net assets, and they're all coming into retirement age. Now, no one's ever offered them, if they've been driving a BMW or some sort of nice car, living in a nice area, flying business class, they're not going to go and suddenly start flying economy or driving an old Commodore. So really, with all respect to the other operators, they're offering Commodores and economy class seats. We've really positioned our Northbrook brand at the business class end, not first class, business class, so it's a sensible price point. But we think there's a huge market in New Zealand for that sort of upper quartile of the retiree market to want to retire in a bit more style and comfort, and we're expecting a huge take-up on that business. And that was a big driver behind raising some extra capital to go into that, because quite often in our big projects, we end up with a piece of land that's perfectly suited to retirement, and why not develop it ourselves rather than just sell it to a Ryman or a Somerset or someone who'll do potentially a lesser quality of product.
That's really interesting. And of course, with the baby boomers, huge bulge in the population coming through, a lot of customers there.
It is, yeah.
Property development, though, certainly not straightforward. And as we mentioned a little bit earlier, consenting, tricky. We've seen the government recently weighing up changes to the Resource Management Act, including a big one is whether environmental protections need to be tighter, maybe stricter.
Yeah.
And one of your companies recently, Northlake Investments, got into trouble for polluting the Kalutha River and too much sediment released. How difficult is it managing these issues when you're building a large development? And do you think Northlake got it wrong, or are maybe environmental standards too high? Where does it go with all that?
Well, I think in relation to the Northlake situation, we had a contractor. We took every possible measure. The council signed off on every measure we took. There was a hell of a rain event. And yes, a bit of sediment went into the Kalutha. We're not sure whether it was from our property or someone else's. We've appealed that, and we're very confident we'll win on appeal. So I don't actually think we did anything wrong there, and I think that will be shown in the fullness of time. And we take the environmental aspect of our business extremely, seriously. And so I think we're fine there. But it is a big cost, and it's a big, complicated beast to manage when you're running sites of this scale. And quite often you find yourself with a lot of territory under construction and being earthworked and whatever, and so you really have to put your mind to how you'll manage all those environmental aspects, and the cost and the complications of doing that are significant, and that's why, frankly, it's beyond the reach of a lot of smaller players, because they just haven't got the resource or necessarily the people or sometimes the money to deal with all those complications, and it's probably why some of those bigger projects are best left to bigger players.
Interesting. Okay. So with all of those pieces, where you're saying you're not sure if it was yourselves or someone else, and you are appealing that conviction,
Yeah.
is there anything you would change about how you handle your sites in the future, or do you think it's one of those situations?
No, it's one of those situations. We were entirely compliant. We did everything plus some that we were required to do. The regional council signed off on it. The district council signed off on it. We regularly, if we know there's a big rain event coming, we'll have guys sitting in diggers all night waiting just in case something should go wrong to shore it up. You can't do much more than we do. But there are, we saw it a couple of days ago in Auckland. Sometimes you just get a rain event that no one's seen that scale of rain in 10, 15, 20 years. And sometimes you can have a bit of runoff, but we do everything humanly possible to avoid that. And that's what we believe we did in that case in Northlake.
And it is tricky, right? When you have these big physical projects, it's not like you're dealing with stuff that's online. It is there, and you have to have people there, and there are things that can happen, weather events. So what do you think in terms of managing it under the current system? Are the constraints a little high, or is it workable?
No, I don't believe so. It's workable, but you really have to put your mind to it, and we do that, and our contractors do that, and I think we've got as good a track record as anyone's ever had. But they're complicated things to manage, and that's just the business we're in.
And of course, the government's still working on changes to the Resource Management Act. From what they've
Yes.
proposed so far, what are the big changes from your point of view? And are you a fan or not?
No, I would not hesitate for 1 second to say I'm not a fan of the Resource Management Act, and I don't honestly believe the changes they've made will take it forward from what we've seen to date. It's a big, complicated beast. You really have to have a lot of resource to navigate it well. I think we do that. We've got a whole team here in the office of resource management lawyers, of town planners, commercial lawyers that navigate the RMA, and it's a very complicated beast. I think it's one of those pieces of legislation that evolved. It probably started off with the right intentions, and then it evolved and got hashed around and changed. And at the end of the day, you've ended up with a big, complicated beast that just doesn't work.
Okay, well, what changes would you like to see in order for us to have quality building and development in New Zealand?
Well, I think we need quality, and we're the first ones to say that, and we're the first ones to build that. But I think you need to just simplify the process. It takes too long. You can't have a situation that we have currently in New Zealand where you've got an enormous shortfall of housing and by anyone's measure, a housing crisis, but it still takes you, years to get a rezoning through, or occasionally years just to get a basic resource consent through. The process is too long. It's too long-winded, and for sure, it's too expensive.
Interesting. In terms of as well with Omicron and COVID, we've seen all sorts of supply issues hitting recently thanks to that. There have been predictions that's going to be an ongoing issue. We're also seeing inflation starting to bite, things just generally going up in price, whether or not there's a problem with supply. And development can be quite tricky with these issues. From what people have told me, we've seen some really big players, sometimes in the property industry, get squeezed on supply and price issues because of the longer timelines on these projects. You can
Yeah.
agree on delivering a project at one price, then costs increase as you go. It can be years, like you said, can make it hard to honor those contracts while making a profit. So, is that an issue that you think could become a bigger one?
I think for the smaller players, yes, it is, and that's undoubted. And we approach it a lot differently. We've got a bigger balance sheet and more available cash. You know, when we start a built project, we order everything we need on day one. So we form these big compounds on the site. We'll buy. If we're laying a pipe in 2 years' time, I'll order it the day we start, and we'll have it sitting there. It could sit on the site for a year, you know. So it has a cash flow implication, but we're buying forward all our material at a huge scale, and we simply haven't had those issues that everyone else has had because of that.
That's really interesting. I mean, a similar strategy has worked very well for Briscoes. So I do think
Has it?
in
Right.
current situation, I think those more conservative tactics have been working well for
Yeah,
people.
but you have to have the available resource to pay for that stuff
Mm.
up front and have it there. But then the benefit is you've got it at the right price, and you know it's available exactly when you want it, and that's the situation that we've fortunately been in for some time now.
Mm. While we're talking COVID impacts, are there any other related issues that you think could impact your business? I mean, one that occurs to me is a lot of industries have been struggling to get workers. Maybe getting boots on the ground for building could be a potential problem, but anything else COVID related that you're keeping an eye on?
Interesting. Yes, we are. Obviously, the lockdowns hurt everyone equally, and I think they're probably over with a bit of luck. But you know what? We've found it very good with labour. I think what you're seeing is a lot of the labour subcontractors and general contractors running around. The smaller jobs have trouble getting materials because they haven't got the resource to buy everything forward. So we get them all knocking on our door, knowing that we do have the resource and the materials available, because they want the consistency of work that we can offer them. So we've never had it so good in terms of being able to access labour, and I think it's probably fair to say that some of the smaller players have never had it so hard. But certainly, when you can offer the subcontractors a consistency of availability of materials, then you have no trouble whatsoever getting the labour to work for us at the right price.
I've heard of a lot of, I mean, Jib has been the big one that everyone has been talking to me about, that they just
Yeah,
cannot get it anywhere. So that must be a huge boon for you guys if you've already built up your materials.
it has been. We got ahead of the curve on that 6, 7 months ago. We ordered an awful lot of jib out of Australia from Boral, and we've got it, and we don't have any of those issues currently, which is fortunate.
How long could you run like that? Or because you've given yourself such a long runway, is it one of those things where you can just keep slowly adding to your stockpile?
We do, yeah. I mean, and I think in this environment, you know, you're prudent to do that. You probably don't have to, but if you don't want to have these hiccups of delays, then you're really prudent to order a long way forward. Um, and people just aren't used to doing it. It's not everyone's used to building on a sort of a just-in-time basis. But if you really put your mind to it, ordering forward's not that complicated. And if you've got the resource, you can do it. And thankfully, that's put us into good stead now.
I was just going to mention the just in time sort of planning, because that has been a huge buzzword in pretty much every industry over the last few years. Have you ever been a fan of that strategy, or is it, mostly while we're going through these supply chain issues that you've changed, or do you always think it's not a good idea?
No, I think I think you can be too much just in time, and you leave yourself no margin for error. I think we've always been a little bit further ahead. We're probably a lot further ahead these days than we used to be, but I think we've always thought a bit further ahead. But I think, in New Zealand and Australia, it all got a bit too tight on the timeframes that people were promising, and it didn't work. So I think actually what's happening now is going to become a good discipline for the future for builders and developers to think a bit further ahead and make sure they've got things a bit more organised into tail end of the project rather than thinking about it when they get there.
Hmm. Now, you mentioned previously, that you would call the current situation a housing crisis. I would
Yeah,
agree with you on that. I think a
yeah.
lot of people are really struggling. So, in terms of the overall housing market, a lot of predictions that there will be a slowdown, maybe a fall in prices this year. What do you think will happen with the housing market? Do you agree there might be a slowdown?
I think there will, and I think we need one. It was too hot last year. It was ridiculous. And I don't think you can expect any market to healthily go up by sort of 25, 30% in a year. And I don't think it's sustainable, and I don't think anyone could be upset if it was then to go up that much and then come back 5 or 10%. I think that's a good sign of a healthy working market, and that's probably what should happen. Within that, though, you can't avoid the fact that New Zealand has a big deficit of houses. There just aren't enough houses to house the populace. And when you start, and depending on which bank you talk to, you get numbers between about 40,000 and 70,000. We think it's probably more towards the 70 end. But there just is a shortage of houses. And so the market will be under pressure because of that shortage. And probably I think what will happen when immigration sort of kicks off again after the pandemic, which it invariably will, you'll see that pressure get exacerbated, and any sort of dip in values will start to slow off quite a bit because the demand will still be there and the shortage will still exist.
Mm. Okay, so what do you think? I mean, we've obviously talked a little bit about the Resource Management Act, but there's a whole bunch more that can impact things. What would you like to see happen? Is there sort of government changes, business changes that could help address these issues?
Well, there are, and the remarkable thing is the government made the changes, a year and a half ago. They introduced this UDA legislation, which was designed to take the planning of really big projects out of the hands of local councils and put it in the hands of central government. So we were the first, our Sunfield project in Auckland in Papakura, which is nearly 5,000 homes and about 250,000 square metres of office and commercial space. We were the first project to apply to that new pathway that they provided, and it's a good pathway, and it's what had to happen. But we're sitting here, I think, about 160, 170 days in, and we still haven't got an answer from the government as to whether we can even use that pathway. So I think they've kind of got the measures there, but they've got to use them. And that's where we find there's a bit of a disconnect between what's needed to be done and what is being done.
Yeah, I was going to talk to you about the Sunfield development because I think it's a really interesting one. So, for anyone who hasn't kept up on that, that is in Auckland near Papakura. You wanted to build, as you say, a 5,000 home community, and it was quite different. You were looking at, carless living, very few car parks, an electric shuttle fleet for transport, and wanted it fast tracked through the Urban Development Act, got turned down. What do you think happened there? And, is it, you say you're still waiting. Do you think it will go ahead in that form at all?
Well, we certainly hope so, and I think it's fair to say that if I mean the government has come out with lots of bold statements about what they want to do on climate change and what they want to achieve on housing, and if you then come up to present a project of this scale that achieves their goals on climate change and achieves their goals on housing, and they decline it, they can't be serious on either policy. It's as simple as that. So where we're at currently is that we applied under the UDA pathway to the central government for access to that legislation. Kianga Ora, I think, were a little disappointed that we didn't want to joint venture the project with them. We didn't need their money. We didn't need their input. We were happy to do it ourselves. We have the resource to do it ourselves. So they said, on the basis we don't need to joint venture it with Kianga Ora, then we shouldn't be allowed access to the pathway. We then went back to the minister and said, well, hang on, the legislation doesn't say anything about we can't use this pathway just because we don't need Kianga Ora's money. So why don't you reconsider that? And the minister has had her officials at MHUD, Ministry of Housing and Urban Development, do a report to her, and she's due to announce whether we're in that UDA process or not in the coming weeks or days.
You sound frustrated with the government approach in some of your comments. Would that be a fair assessment?
Very fair, yes.
What would make it less frustrating?
Well, I think they've got to recognise that the problem of this housing crisis can't be solved by government alone. Government can produce houses and should and will, and I have no problem with that. It's a good process for them to be going through and a good thing for them to be doing. But they need the private sector to deliver houses as well. And they've got all this legislation that they've enacted to make it easier for the private sector to deliver housing on scale. Just let us use it. We're not after a single dollar. We're not after any resource from them. All we're after is to be able to use the legislation they've put in place. And I don't think that's an unreasonable request.
Hmm. Okay. And, with everything happening in the housing market and the possibility of more changes, how are you keeping an eye on all of these disruptions, the government changes? How will all of that impact your business, do you think?
Look, it keeps, in a way, it keeps supply constrained, which is I don't think is a good thing for New Zealand, but it's a good thing for Winton because we have lots of supply. We're sitting, as I said, on a land bank, 7,500 lots. We're developing through those. We've got a pre-sale book of just around 2,000 lots that we're in production in on it at the moment. We've got very strong forward cash flows. We're sitting on forward orders of give or take $750 million today. Our main focus is on delivering that. They're sold, they're approved, they're underway, they're done. That's our initial focus is to deliver those and certainly to hit the revenue and profit forecasts that we provided in our prospectus when we did our IPO.
One of the things that I've found really interesting, particularly in watching the property development space, is there has been a push to change the way some of the houses are built in New Zealand to more medium density, building
Yeah.
maybe 2 or 3 stories instead of just 1 and building a little closer together, townhouses instead of individual parcels of land, which has got a lot of fans from, I would say, people who want to buy a home and feel frustrated currently. Maybe fewer fans from people who have lived in areas that they say have a certain character that they don't want changed. Now, is that something that impacts your business, and where do you land on that whole debate?
I think it doesn't really impact our business. I think there's a bit of alarmist opinion going on in relation to that. I think the reality is that you'll never see the sort of supply that the government or the councils are talking about in terms of that infill 3-story, I call it the sort of Eastern European style development that they wanted to provide, because you haven't got the services infrastructure. You can't have that many more connections to the stormwater network or the sewage network. It won't cope with it, and I don't think there's the money available to upgrade the services in those existing areas. And in fact, if you think about it, you've got to service new housing, but if you're going to service a greater density than what the pipes can handle in an existing suburb, it's the most expensive possible way to do it. You've got to dig up the roads, dig up the pipes, make bigger trenches, put bigger pipes in, fill it all back again in a built-up area. It's very time-consuming, very expensive. It's a horrible way to do it. If you're going to provide new housing efficiently, by far the most efficient way to do it is in new greenfield, reasonably dense areas where you can put the pipes in the ground from the get-go at the right size, and the roads are the right size, and the power the right size, and everything's already done there for you from day one. Going and rehashing old existing suburbs to fit more density in with more services is not the answer. And I don't think you'll see a lot of that because it just doesn't work.
Interesting. All right. Now, just a note for our audience. We are coming to the end of me asking questions. So if you have questions, I'm sure there's lots on your mind now. You asked fabulous questions last time, so drop them into the ask a question slot. And of course, have a look at the questions that are there. Upvote the ones that you are interested in. I see a few upvotes already. That lets me know what you're most keen on and what to start with. So do get amongst on the questions there, team. The last one from me, though, what's on your radar for the next 12 months? What's a high point and a possible low point that you are keeping an eye on?
I think what we're focused on is delivering on the sales we've already made. So as I said, we've got a very big pre-sale book. We're very focused on delivering those sold products on time, on budget, and we're doing that, and it's our day-to-day. I think the high point, though, is our entry into the retirement village sector. As I said, we've got 5 sites that we own today. They're all in various stages of design and construction. But we really think we're going to claim the high ground in this sort of upper quartile of the retirement sector and own it for good. And I think, we're really excited about getting the first product built and the first residents into those villages. And I think what it does for Winton is it provides us a really good recurrent earnings structure. So, we've got the development profit coming in on the residential side, and we'll have a fantastic recurrent earnings business out of the retirement village side. And ultimately, we'd like those components of our business to be around 50-50. So we're really putting a big push into the retirement sector at the moment. And I think that will have a significant impact on the valuation metrics and multiples that are applied to us on the stock market as well when that's more firmly underway.
Interesting stuff. Okay, well, jumping into the questions from the audience here, and we have to start with this one. 9 votes. Our Sharesies listeners have their eyes on the prize. What will be the dividend structure for Winton Land?
So we've come out in our PDS at the listing time and said we will distribute between 20 and 40% of our net profit on a 6-monthly basis, and that hasn't changed.
All right. And why do it that way?
Well, I think we're obviously wanting some dividend flow, but we're also wanting growth. And so we do expect to reinvest a lot of profit in the business and grow it at a fair clip over the next few years.
This is a really good one from Jason. What unique return does Winton aim to provide to investors? What sets you apart from other property companies?
Well, first off, we're the only developer of scale, of this sort of scale, that's listed in New Zealand. And I think in this market where supply is an issue and reputation is an issue for buyers, the strong will get stronger, the big will get bigger, and the small will get smaller. So I think we really represent the only path on a listed environment to that sort of scale in the property development and, I think sweetened by our retirement exposure. So that's, I think, the obvious answer as to what sets us apart.
I really like this one from Colin. Build to rent, that was not something that was really talked about commonly, at least not in the news,
Yeah.
even a year ago, I think. And so Colin said, does Winton have any interest in the build to rent area?
We do, and we've spent quite a bit of time looking at it, and we are in some discussions with some institutional investors who want to participate and want us to be involved. The fundamental problem, though, at the moment is the GST. You pay your GST and don't get it back on build to rent, which sets you behind the 8 ball, if you like, from the typical investment apartment that gets built and sold and bought by someone and rented out. So you are facing a bit of a GST impost. We have lobbied the government on that. We haven't got a meaningful responses yet, but I think if the government really wanted to push the build-to-rent sector along, they would change the structure of the GST on that product. I know they're looking at it, we just haven't had a response.
Why do you think the build to rent area has all of a sudden become a talking point, and do you think it's a solution that should be bigger in New Zealand?
Totally. If you look at the institutional demand from around the world, the big institutional pension funds and institutional property investors have really turned away from retail. I think they're getting a bit softer on their view of office. And the catchword these days of what they want is beds and sheds. They want build to rent apartments, and they want big distribution centres and industrial sheds because that's where they see the strength is. So, yeah, I'm confident that it'll be an institutional asset class in New Zealand within the next 5 years, and the exact timing on that will really depend on this GST treatment.
I'm just going to take the time to address a question here that I believe is a Sharesies question rather than a Winton question. I'm a New Zealand citizen. Will I be able to trade on the platform? Now, I believe one of the Sharesies team has a link that they're going to drop for you in the discussion box, and that will take you to a question, an answer there that will hopefully clear that up for you. So keep an eye on the discussion box there. Back to Winton questions. How much of an impact do you anticipate the current climate, i.e., COVID, inflation, supply chain, and now Russia-Ukraine crisis impacting the company? I mean, we talked about a lot of that, but Russia and Ukraine is another one as well. There's a lot of disruption happening, isn't there?
There is, and I guess again going to our forward book, so we've pre-sold $740 odd million worth of property, and behind that we've pre-let delivery contracts on about 90% of the next 2 years of production. So we believe we've hedged ourselves against any potential impacts from the war or COVID or anything else by really going to a lot of trouble to make sure we've protected our revenue and cost sides of the business a long way into the future.
Okay, and in terms of the retirement developments, this one from Thomas is a great one. Does Winton undertake long-term asset management strategies to predict CapEx costings over long periods?
We do. We've got a team involved in that. We've been very, very fortunate to have Julian Cook, who was the CEO at Somerset for give or take 10 years. He's come on board not only as an exec director, but as a significant shareholder in Winton. And he's got a great team around him to run and operate the Northbrook retirement business. And part of that is a building services team that really has to project, again, well into the future, costs of maintenance and repairs and general asset management of all the facilities going forward.
Going back to Sunfield, this one from Jason. Do you see that development as the way of the future? Are there plans to duplicate that concept elsewhere? I mean, I guess with your frustrations, that might be a bit of a hairy question.
Oh, no, not at all. Happy to answer that. No, we do see it as the way of the future. I think the old town planning mantra, if you like, was to live over here and to work over here. And those here and here would be about 10, 15 kilometres apart. And so you spend a lot of time getting from one to the other every day. And I think what's frustrating most Aucklanders particularly is the traffic and just the complication in getting around Auckland from A to B. And often you see people wasting an hour, hour and a half, 2 hours of their day just getting to work and back, which is no way to live. So we think, and taking our guidance from other parts of the world, particularly in Europe, we see there's a real push to live really close to where you work. And so the Sunfield concept really is, we don't want people spending an hour each day going to and from work or more. We want them to be able to jump on their scooter or their bike or an electric bus and be at their place of work in 5 minutes. And so the Sunfield concept is we have as I said, give or take 5,000 houses. We've got 2 schools, we've got 3 retirement villages, we've got 4 shopping centres. And importantly, the hub of the whole thing is about 40 hectares, which equates to about 250,000 square metres of commercial space, which will allow for about 11,000 to 13,000 jobs. So really, if you live in Sunfield, if you want to, which we think you will, there's a job for you just down the road. And that's an important way to live, especially when you're getting to work via some nice greenways and pathways and places that are pleasant to be, rather than sitting in your car stuck in traffic for 2 hours a day. It's no way to live. So we really do think it's the way forward. Having said that, if we don't get Sunfield approved through this UDA pathway or the old RMA, we do have a consent on about a quarter of the site already, just to do your typical, house and road and car sort of development. And that equates to an initial 1,500 homes, and then we will look to consent the balance for another, 2,000 or 3,000 lots on that over time, just as a typical good old-fashioned roads and traffic development, which we're less keen on doing. But if the zoning rules force us down that path, that's where we'll end up. But we're really hoping to lead the way into the new way of living, clean, green, efficient, friendly and neighbourly in the context of the Sunfield proposition.
Well, it strikes to, one of the concepts that I've heard talked about a lot recently is this idea of the 15-minute lifestyle, that, the home should be 15 minutes walk away from schools, shops, jobs. And is that what you're aiming for there? And that's what you're finding is being frustrated a little bit by our current planning rules?
Yeah, precisely. And the current planning rules hadn't thought of it. They were written 30 years ago. They didn't think about this. They were just, the current planning rules are, you get your car, you drive over here to work, and you come back at night and you park it in your garage, and that's that. The new way of living has to be the 15-minute neighbourhood where you get everything, not everything, but most of what you want. Shops, schools, daycare, aged care, healthcare, and obviously a job within 15 minutes. And it's a much more pleasant way to live. But unfortunately, the good old-fashioned 30-year-old RMA never contemplated it and can't really accommodate it.
Really interesting stuff. I could keep talking about this for ages, but we are out of time, unfortunately. Thank you very much for tuning in, everyone. A very special
Thank
thanks to
you.
Chris Meehan for joining us. Really appreciate your time and your insights. Now, please do also check out the Sharesies Daily Financial News Podcast Recap. It's about 10 minutes long, published at 5 p.m. Monday to Friday on Spotify, Apple Podcasts, and Google Podcasts. We will see you back here next Thursday for another shared lunch. My colleague Dan Brunskill is talking to Soul Machine's co-founder Greg Cross for a deep dive into the metaverse. There's a link to register for that in the chat right now. Enjoy the rest of your week. Stay safe, everyone.